Okay, so welcome po, no? So, sa Accounting 2S, we are now in week 7 to 10, and this is ULOB. So, big picture and focus ULOB, compute and interpret financial ratios such as current ratio, working capital ratio, gross profit ratio, net ratio, receivable turnover, inventory turnover, debt to equity ratio, and the like. So, this is in continuation with financial statement analysis. Okay? So, financial statement analysis, it is the process of evaluating risks, performances, financial health or status, and future prospects of the business. So, by subjecting financial statement data to computational and analytical techniques. So, the objective of this is, syempre, simple rin, no? Making economic decisions. So, we're done with the first two, which is yung horizontal analysis at yung vertical analysis. This was yung ULOA. And the last one is the financial ratios. So, sa financial ratio, ang daming formula nito, guys. So, what you're going to do, it may be to summarize all the formula. So, kung yung pinabuhat dati. Okay? So, essential knowledge here, financial ratios. It is express the relationship among selected items of financial statement data. The relationship is expressed in terms of percentage, rate, or simple proportion. So, usually percentage. So, in the following, or the process of using financial ratio, we evaluate the company ratios are often divided into 4 categories. So, meron po siya 4 na category. The first category is liquidity. So, if you see liquidity, this ability of the company to pay or settle, it's to take a look at this one, no? Current obligation. So, current obligation po. As they fall due. The solvency naman, same pa rin sila. Ability to pay, pero yung ability to pay niya is to settle non-current or long-term obligation. So, liquidity, short-term obligation ng company or current obligation ng company. Solvency naman is yung non-current or long-term obligation. Then, profitability, it measures the operating performance. Okay, performance of the company. Income statement as a return on its investment. And it is management efficiency using company's resources in order to generate revenue. Market value or valuation. So, it measures the company's total potential for future earnings, dividends, payments, and stock prices. So, itong pang-apat, okay, we will not discuss this one kasi nga, this is for corporation setting. And based on the objective, okay, so we are to conduct financial statement ratios of the sole proprietorship. Okay, so wala pa tayong corporation. This will be discussed sa higher accounting na ninyo. Katong mga mag-DSA puhon. Puhon. So, the next one here is the financial statement. So, based on the financial statement, gagawa ka ng ratios of this one. So, the first ratio here is the liquidity ratio. So, to make it easier, okay, na pag-discuss, okay, pag-illustrate, let's have parang comparison. So, as you can see, you have here, sa left side is the financial statement, and sa right side naman is the ratios. So, liquidity ratio starting with current ratio. So, current ratio measures the ability of the business to pay short-term obligations as they fall due. Okay? Short-term obligations as they fall due. So, example of this one, or shall we see, the formula of this one's current ratio is equals to current asset divided by current liabilities. So, makaning mga current asset liabilities asa nimo makitaan sa statement of financial position or the balance sheet. So, here, magkano yung current asset for 2019? So, nasa current asset na 550,000. So, 515 divided by current liabilities na 145. So, sige ka ng 145 na current liabilities here. So, nasa 3.55 times. Okay? Then, sa 2018 naman nasa 545 na current assets. So, sa current assets dala, 545. And then, nasa current liabilities na 161,095. So, sa gikan ng 161,095 dala. Okay? So, 3.39 is the current ratio for 2018. So, what is the analysis of this one? So, as you can see, the current ratio for 2018 is 3.555 to 1. So, while of 2018, that is 3.39 or to 1, this indicates that 2019, the company has 3.55 of current assets that can be converted into cash to pay every peso of current liability. So, as you can see, ang 355 means sa isa ka current liability, kaya niya bayaran 3.55 times. Okay? Pinagi sa iyahang current assets. So, kumbaga again, 355 times sa current asset, kaya niya bayaran ng isa ka liability. So, grabe ka, liquid siya, no? Kaya dagan pa kayo siya of reserve, dagan pa siya of current assets. Based on, if you were to compare this one, okay, the company has 3.30 na current assets to cover, the current ratio is increasing, signifying that more liquidity of the company, okay? So, although the company is satisfactorily liquid in 2018 pa lang. So, as you can see, based on the comparison, 2019 tsaka 18, so increasing, nag-increase yung current ratio ng company. So, it means to say, increasing yung ability ng company to pay a short-term obligation. Okay? Next one is yung quick ratio. So, quick ratio naman, ang gina-consider lang niya here, same pa rin sila, no? Current assets, pero in this case, specific assets na siya. Cash, short-term investment, and trade receivable. So, bakit ito ang tatlo? Kasi these are easily convertible into cash. So, cash pa lang daan, ma-convert na sa cash. Cash lagi siya na daan. So, kung short-term, dali na po dali siya ma-convert into cash, and even trade receivable, dali na po ma-convert into cash. So, kaya nga, these three are considered as quick assets. Okay? So, kaning tulo kanina. These are quick assets. Quick assets. Divided by current liabilities. So, like in, for example, 2019, so you do have here 355 plus, baliktad na siya dapat 0, then plus, saan yung plus natin? Ayan. 305. So, kumbaga, 355, which is the cash equivalent. And then, 0 kasi wala tayong short-term investment here. Walang given na short-term investment. Then, plus 85, which is the accounts receivable. Okay, divided by current liabilities na 145, which is this one. Yan. So, the total or the quick ratio is 3.03. And the next one is 2018 naman. So, dito baliktad po ito. So, for 470, 375, which is the cash and cash equivalent, plus wala po tayong short-term investment, so plus 0. And then, plus 3515, which is the accounts receivable. Divided by 161,095, which is the trade and other payables. So, nasa quick ratio na 3.11. So, based on quick ratio, same pa rin siya class, yung ability to pay ng company. Okay, sa mga current liabilities. Dili nasa 3.03 times. Okay, ability to pay its current liability for 2019 and 3.11 for 2018. So, medyo nag-decrease lang siya. Next one is the receivable turnover. So, this one naman, it measures the efficiency of collection. Okay, collected amounts due from credit customers. So, this will check the company is, improving ba siya when it comes to collection or not. The formula of this one is yung accounts receivable turnover is equals to net credit sales divided by average total or trade receivables. So, to compute for average trade receivable, that is just beginning plus ending divided by 2. Okay? So, like for example, 2019, net credit sales, asan yung makita ng net credit sales? Siyempre sa income statement. Nasa baba yung income statement. Ayan, nadali ang net sales no 745,000. Sorry. So, 1,745,000 divided by average ng accounts receivable. So, average is beginning, 85. Ending pala ito. This is the ending, 85. Beginning is 3515. Okay? So, kumbaga, bakit beginning ang 3515? Kasi nga, di ba, ang ending sa 2018 will become the beginning for next year, 2019. So, 85 plus 3515 divided by 2, so that's the average. And then, 1745 divided by the average, so nasa 30.21 times. The same with 2018, so in this case, wala siya in average ka, wala man siya beginning. So, automatically, 3515, which is the ending na accounts receivable for 2018 is the denominator. So, no need to average na kayo. Wala man siya beginning. Okay? So, divide mo lang, 41.57. So, as you can see, our receivable turnover for 2019 is 30.21 times, while for 2018 is 41.57 times. So, this indicates the company was able to collect receivables 30.21 times in 2019 and 41.7 times in 2018, which is, diba, nag-decrease siya. So, it's mean to say, nagahina ang collection policy ng company. Kumbaga, if you say 41.57 times, so, 41 ang tuyok niya. Cash, receivable, nahimong cash, receivable cash, 41.57 times. Kani, nibaba siya, which is, unfavorable sa side sa company, no? Kanina ang iyahang collection. So, maybe this entails that the company must improve their collection efficiency. So, need to improve their collection efficiency. Okay. The next one is the average collection period. So, yung kanina, how many times? Dirian naman sa average collection period, this is how many days. Okay, the number of days it takes to the business to collect its receivable. Okay? So, yung kanina, the higher the better. Okay? Kasi, pas-pas ang iyang galing sa receivable. Diriya, the lower the better. Okay? So, like here, for example, to compute for average collection period, 360 days, divided by trade receivable turnover. 360 divided by 30.21, asagi ka ng 30.21, itong answer sa previous. Ayan, this is the AR turnover, 30.21. And then, same with 2018, 360 days divided by 41.57. So, nasa 9 days. So, as you can see, or you do have here another computation by using this formula. So, average receivable divided by average daily sales. So, average receivable yung kanina. So, daily sales, 1745 na total for the entire year divided by 360. And, same yung kanina, 3515, no need to average since beginning lang man, ending lang man siya, wala data for beginning. And 68615 divided by 360, so nasa 9 days. So, same. They have the same result. Okay, whether, either of this one, either of these two pala, either of these two formula, you can have the same, or the result is the same. So, as you can see, the average collection period is 12 days for 2019, while 2018 is 9 days. So, the determination whether those days are favorable depends on the credit terms extended of the company to its customer. If the company's terms is credit is 30 days, so then the average period for the year is favorable since 30 days credit term. So, it means to say, kung 30 days ang ilahang ginahatan niya deadline, so wala siya nilapas, no? Kaya 12 lang man nag-9. So, okay, good. Kasi within the deadline for collection. Okay? Then, the company is effective in collecting its receivables since yun nga 30-day credit term. So, if this is more than the 30-day credit term, so mayroong problema, so the company may need to extend their collection efficiency. So, diri asa ang much better sa duha, 19 or 18 when it comes to days. So, syempre, much better ang 9 days. Okay? Within 9 days, ibayad na si customer. So, average within 9 days, ibayad na si customer. Unlike with this one, 12 days pa. Okay? Just 3 days more. Unlike with 28. Next one is the inventory turnover. So, this measures the number of times that a company's inventory is sold. Okay, so kapila mahalin ang inventory sa isa ka tuig. So the computation of this one is inventory turnover, cost of goods sold divided by average inventory. Beginning plus ending divided by 2 to compute for average. And you do have here 2019. So 995,750 which is the cost of sales. Divided by average sa inventory 50 which is the ending. And 21 to 50 ang beginning. Okay? So, beginning niya, which is the previous year. Divided by 2, so the answer is 27.99. 2080 naman, so here, 725,414.25, which is the cost of sales, divided by 21 to 50. So, no need to average. Kaya ano gani? Isa lang man niya ang gihatag. Wala siya naghatag og previous year. Ending lang yung gihatag. Wala na previous year. So, automatically, 21 to 50. 21,150, I mean. So, the answer is 34.30 times. So, it means to say, inventory turnover for 2019 is 97.99 times, while of 2018 is 34.30 times. As a general rule, the higher inventory turnover, the more profitable the company. This means that merong high demand ang company's product. On the other hand, low inventory turnover naman may signify low demand for the product. So since both of them is good naman, malaki-laki rin, pero mas paspas lang din ang 2018. Okay? Kasi demandable sa 2018, pagabos 2019 is nibaba na siya. So, if it is low demand for product, the company may prompt to have or moves such as embarking on advertising program. So, diba? Based on the ratio, you can give recommendation. Or the company, the management may provide recommendation what to do in the future. So based on past experiences, they can provide recommendation what is the need of the company in the future. Average sales period naman, so yung kanina, times. Dito naman, number of days. So, time to convert inventory to sales. So, this one you do have here, 360, which is the number of days divided by inventory turnover. 360 divided by 27.99, yung answer kanina for inventory turnover. And then 360 divided by 34.30 for 2018. So, 13 at saka 11 days. So, kumbaga, isa naman ito na, napupag mo sa lahat. 13 days, makonvert ang inventory, average 13 days, makonvert ang inventory into sales. 2019. 2018 naman, 11. So, average sales period, 30 and 11 for 2019 tsaka 18 respectively. Even though there is an increase in number of days as evident by decrease in inventory turnover in 2019, from 18, the company has a capacity to easily solve inventory within 13 days. Sapat pa sige hapon, pero pagka tugi-tugi nung gamay siya. So, check lang ng company ano yung problem. Okay. Working capital. It measures the short-term liquidity of the company. So, working capital is equal to current asset minus current liability. So, 2019, current asset 515, which is this one, 515, minus current liability na 145. So, total working capital is 770 for 2019, then 384,595 for 2018. So, working capital for 2019 is 70, and 2018 is 384,595. This indicates that the company is more liquid in meeting short-term obligation. Kasi nga, mas dako ang current asset kasi sa current liability. So, you can say, more liquid siya as compare to other, or shall we say, more liquid siya for 2019 and even 2018. Solvency ratio. Okay, so yan. Solvency na so long term na punta. So in this one, debt ratio, it measures the disability or liability as percentage total assets. So debt ratio is just total liabilities divided by total assets. So 345 total liabilities. So ayan, asa nagikan dala sa balance sheet divided by total asset na 1415. So this one, the balance sheet also. Same with 2018, so nasa 24% for 2019 and 26% for 2018. So this went slightly lower 2019 than 2018, which means that the company does not rely heavily on external borrowings. Okay? The next one, equity ratio. Ito naman, percentage of, ibabaw na siya. Yan. It measures the percentage of total asset as financed by owner's investment. So, diri yung kanina about external borrowing. So, here naman is more on investment coming from the owner. So, as you can see, nasa 76% for 2019, 74% for 2018, as computed using total equity, which is 1,070,000 divided by total asset na 1,415,000. So total equity 76 at 74, this is critically higher than indicates that the source of funds of the company is from the owner. Diba, take a look at this one. Out of total asset, yun nga, 24% ang sa liabilities, while 76% ang sa equity. So it means to say, mas ang mga investment or sabi siya ang source sa fund ng asset kagikan sa owner. Okay, heavily gikan sa owner. Okay. Then debt to equity ratio naman. So this is total liabilities divided by total equity. So it measures the financing provided by creditors against provided by the owner. So sa creditors na siya 0.32 for 2019 and 0.35 for 2018. So the debt equity ratio for 2019 is 0.32 while 2018 is 0.35. This means that the 2019 for everyone financed by the owner of the asset of business, 0.32 was financed by the creditor. And 2018 naman, everyone financed by the owner, 0.35 was financed by the creditor. So heavily they are more on coming from the owner, yung assets. Times interest earned. So here naman, it measures the company's ability to pay interest charges of the company for its outstanding liabilities. So here, times interest earned ratio is just income before interest and taxes. So sige ka ng income before interest and taxes, nasa income statement. Yan. So 83, 352 for 2019, and 112,295.25 sa 2018. Okay, so 88 pala, sorry. 88, 392, 352, and then 112, 295.25. Divided by 45 na interest, so tapad din sila, nasa baba lang, 445. And then, 2140 naman sa 2018. Okay, 2410. So, nasa 19.60 times for 2019 and 46.60 times for 2018. So, it means to say, yun nga, 19.60 times that the company will be able to pay its interests coming from the income. Yun nga, 19.60 times kaya bayaran sa company ang interests. Okay, based sa income pa lang daan. This is not equity ratio, this is times interest earned. Okay, times interests earned ratio. Okay. And the last one is the profitability ratio. So, yung profitability ratio naman, the first one is yung gross profit ratio. So, this measures the percentage of peso sales earned after deducting cost of goods sold. So, the formula of this one is gross profit divided by net sales. So, in this case, you do have yung 2019, 749,250 which is the gross profit for 2019, and 1,745,000 for net sales ng 2019. So, nasa 43% sa gross profit ratio, same with 2018 na 42%. This is actually the initial markup. So, consistent gihapon sa markup, no? From 2018 to 2019. Operating profit margin naman, it measures the percentage of operating income earned after deducting cost of. Okay, so, continuation lang siya. Operating profit margin, operating income divided by net sales. So, operating income, 88,352 divided by net sales na 1,745. So, kasi 5% for 2019, 9% for 2018. So, operating profit margin 2019, 12% and 9% respectively, 19 saka 18. There were decrease in ratio. This in-test management may not be effective in handling expenses. Kasi so as you can see, masidako manggod ang expenses selling and admin, di ba? Grabe, oh. Layo kasi lagbiya. Okay? There may be a check. Okay? Baka may malaking expenses. Okay? Nagigasto sa company. Which is not necessary. So, mag-cost cutting na sila. Net profit margin. So, it measures the percentage of net income earned from net sales after all other income had been exhausted. So, operating expenses and other expenses, including income taxes, have been paid. So, net income or net profit margin, so net income divided by net sales. So, net income, nasa 68,075 divided by 1,745 net sales, so nasa 4% for 2019. 2018 naman is 8%. So, it means to say net profit margin for 2019, 4%, 2018 is 8%. It seems that 2019, it was half. So, grabe, no? So, nahitabo nga nung half man. Management should consider cut the expenses if they want to improve net income for further operations. Like cost cutting needed. Return on assets. So, the last ata. Return on assets. So, it measures the company's efficiency of using its level of investment in order to generate income. So, this is the ROA. So, net income divided by average total assets. So, average total assets is just beginning plus ending divided by 2. So, 6,875, which is the net income divided by average assets. Total assets na 1,415,000, this one. Tsaka yung beginning ng 1,125,290 divided by 2. So, nasa 5% for 2019, 9% for 2018. So, it means to say, return on assets for 2016 is 9%. So, this is not 2016, this is 2019, not 2018. While it was decreased to, in 2019 to 9%. Despite of the heavily, this is actually from 5%. 9%, yeah, 2018. And this was decreased to 5%. Mali-mali yung mga data sa ng class. So, despite of heavily acquisition of property, plant, and equipment, this is the company's asset were not fully utilized to generate income. Okay? Baka hindi ginamit lahat ng company yung mga assets intended for generating income. So, the discussion here after this one. So, after discussion, the qualitative characteristics, it must be noted that there are other factors that are equally important in analyzing financial statement. The qualitative factors in financial statement analysis are as follows. So, siyempre, you may not actually focus on the financial performance of company for the previous year, pwede pagka i-consider nimo ang customer's feedback for improvement. Even mga competitor nimo, okay? So, at par pa ba ka in terms of their benefits, or in terms of their services provided? So, you have to take into consideration also the competitors, the market share of the company, the industry's growth, and the supplier. Okay, so thank you very much for listening. Bye-bye. And God bless.